The Board of Equalization was authorized to use this methodology whenever it had good reason to suspect a company's books, but frankly I've seen them use it on every audit I've ever faced of certain type of cash-based intensive businesses. The state of California will walk away from a direct audit approach in your records upon a whim, upon a change in wind direction with no rationalization whatsoever. All that is required is for them to dream up a reason to suspect that your books are accurate. The markup methodology starts with this. The government suspects cost of goods sold on certain businesses. Certain businesses understate their income tax liability and their sales tax liability by dropping cost of goods sold off of their books and the associated sales related to them in various fashions. Of course, what I'm describing is fraud. The auditors will reach out to a company's vendors and they'll discount the cost of goods sold recorded on your books, go straight to the folks that sold you inventory for an entire year and say, for 2012, for example, what was the total of goods that you sold XYZ business? If the government through XYZ letters determines that you have large amount of cost of goods sold that has been omitted off your books, they will interpolate that there's been a large amount of sales related to that cost of goods sold that has also been dropped off your books. They're also not stupid. They also realize that cash-based businesses will often use cash to pay for their cost of goods sold as a way of keeping it off their books. This is fraud with a capital F. If this is your fact pattern, you need someone like me or they're going to hang you out to dry. BOE auditors realize that if they can't determine what the cost of goods sold for the year was, then they can't use a markup percentage to determine what the related sales on that cost of goods sold should have been. For this reason, certain types of businesses are incredibly susceptible to markup audits. Frankly, the Board of Equalization and the Franchise Tax Board believe that cash-based businesses, as a matter of route, understate their sales and understate their cost of goods sold in order to cheat. Worse yet, a company that overstates its cost of goods sold and understates its sales is even more fraudulent. The following types of businesses are extremely susceptible to markup audits: bars, restaurants, gas stations, convenience stores, liquor stores. These types of businesses are cash intensive and very susceptible to markup audits. If this is your business and you know you've been skimming, you need to call me. The markup calculation is where they determine the markup percentages that you use to get for what you paid for an item of inventory to its sales price. Example, you buy something for $1, you sell it for $3. The markup percentage is 300%. So if they determine your proper cost of goods sold, they can take cost of goods sold times 300% to come up with what your sales should have been for the year. This is done for each item of major inventory that you sell. So, to reiterate, the Board of Equalization analyzes your purchases of inventory for the year, figures out what your markup percentages were on each item of inventory, extrapolates that out once they identify what cost of goods sold is to what your sales that should have been reported are. The difference between your reported sales and the sales they calculate is going to be the deficiency, which can be caused by simple accounting oversight or fraud, depending upon the government's attitude toward you. In my extensive sales tax experience, the marked up calculation of sales is invariably always higher than the reported sales on the sales tax return, as a matter of course across the board. I need you to keep in mind that even if you completely trust your point of sale system, your accounting system, and you really feel that all of your sales are proper, it's irrelevant here. You're faced with this methodology whether it makes sense to you or not. What I find most infuriating is, based on my experience, the markup methodology used by the Board of Equalization is flawed, and you're left with fighting the fight to convince them that it's not, and that's an uphill battle, even with someone as talented as myself on your team. What you realize at the end of the day, if they accuse you of unreported sales through a markup methodology, at best you're looking at sales tax, at worst you're looking at criminal exposure, additional income taxes, both at the federal and state level. At the end of the day, it's the taxpayer's responsibility to prove to the Board of Equalization that the markup audit, as applied to your facts and circumstances, reached an incorrect result. It's for this reason that I use an ex-Board of Equalization auditor on my team There's no better way to fight off a sales tax audit with the opinion of a seasoned sales tax auditor that's now on your side of the fence in your corner. Who better to find the flaws in their methodology than someone who understands their methodology? For the reasons just stated, it's imperative that you hire an experienced sales tax attorney to have on your team if you're faced with a Board of Equalization markup audit. The attorney will be on your side to help you navigate the complex laws of the Board of Equalization sales tax folks, and to keep the Board of Equalization's audit procedures and tactics in check. A sales tax attorney in your corner can help make sure the Board of Equalization does not overstep their bounds and apply the complex law in their favor to your disadvantage, and help prevent the Board of Equalization from making unfair rationalizations that help them and hurt you. In my opinion, and a lot of people I know and respect, it is simply wrong for the Board of Equalization to overstep their bounds simply because the state of California needs money. Furthermore, this attitude in California that cash-based businesses routinely understate their income is very dangerous and toxic to you if you have a cash-based business. It can result in tax fraud if allowed to be proven. Here's an example of some scary things that I've seen develop in sales tax audits. In one of my audits, there was a cocktail waitress that was running her own under-the-table business. She was pocketing half of the sales that she made for the evening, and it was discovered, her embezzlement was discovered, and it was found that the owner of that business was still liable on the sales tax that was charged to the customer on that underlying activity, even though the business owner never saw a penny of that revenue. Being forced to pay the sales tax on underlying embezzlement in your business adds insult to injury, but unfortunately, there's lots of case law in California that will support that treatment by the Board of Equalization. Lately, we've been representing lots of cash-based businesses in California that have what we view as criminal tax exposure for the unreported sales that were allegedly identified through Board of Equalization markup audits. The exposure stems from the fact that the Board of Equalization routinely reports any one quarter where they find $100,000 or more of unreported sales in that quarter to the Franchise Tax Board, who may in turn refer it over to the IRS. The Franchise Tax Board, when it receives this information, can either automatically assess the business on the unreported sales or open its own criminal investigation, or make a referral to the IRS's Criminal Investigation Division over the unreported sales. Lastly, the Board of Equalization, in very egregious cases, can bring criminal charges on its own for felony sales tax evasion in California. This is serious stuff. What's very frustrating in this area is there are several weaknesses in the markup methodology used by the Board of Equalization. The existence of these admitted weaknesses is the largest reason you need a tax attorney on your team if faced with a BOE markup audit. You need to protect yourself from the state of California, at best overreaching for sales tax, at worst creating criminal tax liability where none should lie. In order to prevail in a sales tax audit, we need to be able to prove to the Board of Equalization there were errors in the logic used to conduct the audit. The way we do that is we combat a sales tax auditor with our own ex-sales tax auditor. Our ex-sales tax auditor has a master's degree in taxation. She's a CPA. She has 13 years of experience, and she's a rock star. She also has me behind her. For example, in markup audits, the auditor is very prone to expect that one markup percentage was utilized for the entire period under audit. Unfortunately, this doesn't allow for companies that change their pricing often. What about sales? What about happy hour in a bar? What about comps? None of this is taken into consideration. Stated another way, the markup methodology often ignores a prior existing pricing structure, often to the detriment of the business owner. Oftentimes in a markup audit, the auditors will conduct a shelf test to determine what the markup percentages are for items off of a shelf in a retail store, or a pour test where they look at the amount of alcohol that's ordinarily included in a drink in a bar. The shelf test can often have incorrect prices associated with it, or the pour test can be improperly weighted. The Board of Equalization's official audit manual that it gives to all its auditors even states to the auditors directly from headquarters, don't rely too heavily on markup audit results, because these results can be very time-consuming to obtain and often give very little real-world meaning. Unfortunately, the foregoing is the reason you need a qualified sales tax attorney on your team to make sure that the auditor's assumptions, methods, and conclusions are proper and lead to a proper end result for your audit. Legal counsel and their staff can dismantle the methodology used in the markup audit to undo the harm that came out of your audit in the first place. We have managed to do this on several occasions in the past.